Welcome back, folks. And, folks, you know, depending on how long you've been listening to me, I remember the first time that I had an interview with our man, Mr. Ken Shreve. I believe it's pushing back about probably 10 years. That's pretty amazing how time goes. Well, now Ken's going to have his own show on TFNN. You're going to be able to check that out each and every week. We'll have the details up on our website. And from the 4 to 5 on Friday, he's going to be on with me so he can give us a heads up and wrap these markets up. Ken Shreve, what's going on?
Everything's good, Tom. Just trying to stay warm here in California. It's cold here today for some reason.
Oh, that's amazing, man. Well,
I know.
The heat's coming in down here. I mean, it's gonna be a good 85. We get summer here this weekend, no doubt.
Yeah, we've had a taste of that in recent days. I went out this morning. I don't know, 8, 9 o'clock in the morning. It was about 48, 50 degrees. So it was just been kind of chilly all day. But I guess it could be worse, right?
Yeah, well,
it could be 15 or 20 degrees.
Yeah, that's right, man. No doubt. You know, so when we look at what are you looking at the market coming into next week, Ken?
Well, you know, just kind of looking at how the market traded today, there just weren't any buyers around. You know, people wondering what's going on with this government shutdown and what's going to happen with that. But there just weren't any buyers around the market today. Volume was never really heavy. It started to pick up probably in the second half of the day, but you see once again the indexes rallied a little bit off their lows into the close. So, you know, we'll have to see. To me, you know, I think this market is like I said, it's kind of one really positive headline from an upside breakout, and perhaps one negative headline from some selling pressure. So I think I'm in the camp right now where I wouldn't be surprised to see, a mild pullback in the market here, but I do think that we could see an upside breakout. So I think we see a little shakeout, maybe an upside breakout, and then we'll go from there. But I think by and large there are a lot of stocks out there that continue to act pretty well. I heard you talking about Google and Apple. Obviously, those stocks are in a bit of trouble here, but by and large, a lot of the stocks on my radar continue to trade pretty well. They seem to be well supported, so I'm trying to stay optimistic.
And when we talk about your radar, specifically, you're looking for earnings acceleration, for growth acceleration, right?
Yeah, definitely looking for kind of the fundamental powerhouses in an industry group. Tend to focus on the strong price performers as opposed to those stocks that are near lows. A name like Google right now, I get asked a lot about that. I'm not really looking at that stock. I think there's a chance it probably could find support down around its 200-day moving average where it currently is right now, but I don't really try to catch stocks off lows. I just try to buy stocks when they're coming out of consolidation phases, and But first and foremost, I really want to make sure that balance sheet is strong. They have to be innovating with a good, solid product that's fueling growth. I want to see good, strong bottom line and top line growth in recent quarters. If it's accelerating, great. It doesn't have to be accelerating, but I like to see that good 25, 50, 75, 100% year-over-year growth, and high return on equity, good profit margin, and then look at the chart and find the best time to buy.
What's amazing is that when I just explaining the first time that I had you on, I remember you specifically talking about Cisco, and what the conversation is that you're saying to me, hey, look, during new markets, you get new leaders that are coming out. He says, everyone keeps looking at Cisco. Now, the amazing thing here, folks, depending if you were in the market in the 90s and even the beginning of the 2000s, that's all you keep hearing. And when I was talking to Ken, about that, Cisco is still trading up there at about 36. The bottom line is that Cisco never came back, period. It's amazing that, some old leaders just never come back, right?
That's for sure, yep.
Amazing. You stay right there, folks. Ken and I are going to be coming right back. This is Tom O'Brien. This is Ken Shreve. We're going to be right back. Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. If you have an interest in mastering any market with superior confidence, this book is for you. I will walk you through the subjective theory behind quality, volume, and cause and effect, coupled with the objective aspects of the Tiger-Gottlieb, all the while utilizing risk management and Tiger scaling techniques. This will give you the elements of a successful system that can be profitably applied to any stock, commodity, or future market, any place, anytime. I'm offering a complete educational program, including the book, for only $88. You'll receive a live 2-hour workshop in your city or online, where we get into quality volume, the ABC structure, as well as the never-seen-before Tiger-Gottlieb. These techniques will make you money on a consistent basis. You can go to TFNN.com to see when I will be in your city. Don't let Wall Street eat you alive. It's time for you to rule the markets. Go to TFNN.com and sign up for the workshop coming to your city.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for. For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. Welcome back, folks. We're talking with our man, Mr. Ken Shreve, and we're talking about markets. We're talking about what he likes to look at for equities as they're going forward. You know, Ken, what's amazing is that when you look at the time that we're in right now, it really does seem that we have the shot for a lot of newer companies. I mean, technology-wise, this seems as close as like 1995, 96, 97, that you have a slew of new technology companies coming on that it looks like there's going to be a lot of great companies coming out.
Yeah, I mean, for sure, and these are the types of companies that I like to look at. I mean, the best time to make the biggest money in a stock is in the early stages of its business, not necessarily in the first or second year, but a new company, I'm talking maybe, 5, 10, 15 years old. But, certainly you see an IPO like Youku.com, Y-O-K-U in China. I mean, this is the company just came out of a first stage base. I mean, a lot of these China stocks, people like to poo-poo them a lot, but you got names like Baidu and Sohu and Sina, and again, YOKU is just a classic example of a first stage base breakout.
Okay.
Where, you've often heard me talk about late-stage bases where a stock can get long in the tooth. And, I'm really seeing a lot of late-stage bases out there right now, and Baidu is arguably one. In other words, it breaks out from a base, forms another base, breaks out from that base, forms another base, breaks out from that base. It does it 4 or 5 times, and by that time the stock is already known. It's on everybody's radar screen.
Yes.
And that's usually right around the time where a stock can top and start to settle into a consolidation. But, a name like Youku is just a first-stage IPO-based breakout, a company that's still in the early stages of its growth, and definitely a name I'm watching right now. So I think this innovation is going to continue. The IPO market is still somewhat sluggish. It's doing better than it was, say, last year or the year before, but I think we'll continue to see signs of life in the IPO market, and look forward to more innovative companies coming public this year.
Yeah, it's interesting when you take a look. I'm taking a look at the revenue on Youku right now. And check this out, folks. So the first quarter, 2010, you do $7 million. Second quarter, 10.4. Third quarter, 17. And the last quarter, 23. That's
yeah. It's called acceleration. And it's not. This is a company with a market cap of $3 to $4 billion. But again, an interesting. It's basically a Chinese or China-based internet television company where companies can share videos. And China's internet population is booming. So this is just one of many examples out there. A name that a lot of people probably haven't even heard of, but definitely a stock worth watching. It's been a bit parabolic over the past 6-7 weeks. It's just been moving higher, breaking out. So this is one that I probably wouldn't chase up here. I'd wait for the market to consolidate a little bit. Maybe you get a new base, a new consolidation phase for Youku, and then from a first stage breakout, then a new base forms, and then you get a second stage breakout, and then most likely a new buy point.
And that's why it's so important to do the homework before the fact, right? So you understand where you should be setting up to buy these babies.
Yeah, the thing is right now is that, we had this sign of strength in the NASDAQ 100 back on March 24th. You had a, big 1.7, 1.8% gain, and that was really the market's way of saying, okay, I think I'm going to go higher here. This was back on March 24th, and right around that time, you had names like Baidu, OpenTable, even the rare earth minerals company Molycorp, Priceline, Lululemon. The list goes on and on. All stocks right around March 24th, March 23rd, March 25th. They all started breaking out in heavy volume. So, but we're now 3 weeks into a rally. So a lot of these names are extended, and I'm getting emails every day. Well, can I still buy? Can I still buy Priceline? Can I still buy Molycorp? Can I still buy Open? And they're a bit extended now, past proper buy points. So you don't want to chase these stocks. You want to see how the market's going to play out over the next couple of weeks. See if they pull back a little bit, maybe come down to their 10-week moving average, and you might get another opportunity to buy them. But when you're investing in fast-growing companies like this, there's a right time to buy them, and there's a wrong time to buy them. And if you buy them at the wrong time, that's when you could be sitting on a loss pretty quickly. So that's why technical analysis is very important, and it's a big part of how I invest in stocks.
Yeah, it's nice when you can do both. That you're actually putting the fundamental with the technical together.
Yeah, exactly. And a lot of people like to. You have your fundamental analysts out there, and you've got your technicians out there that don't pay too much attention to fundamentals. But I really, when I start my research, sometimes I'll look at a chart. If a chart might pop out at me and say, "Oh, look at this! It's been basing for 6-7 weeks," and I'll say, "Okay, good chart." But then then I'll go to the balance sheet and look at the latest earnings report. Look at annual earnings growth. So I want to make sure that I have as many positive qualities as there can be. I want as many positives as possible from a fundamental and technical perspective, and then you just you make the buy.
What's amazing is that I have Priceline up on the screen right now. And it's just amazing that the stock. $45 in November of 2008 to 506, right?
Yeah, and this is another example of a stock that has been running higher. I would not call Priceline though a late stage base. I would say Baidu, Netflix,
Okay.
Apple. I would call those three stocks, Baidu, Netflix, and Apple, late-stage bases. Now, the thing is that, you know, a breakout from a later stage base, maybe a fourth stage or even a fifth stage base, they can work. They can have staying power. But you want to be able to recognize stocks that over the past couple of years that are up 200%, 300%, 400%. You know, you want to understand where you're buying a stock.
Yes.
Baidu continues to trade beautifully. I mean, it's just a pillar of strength. There's still a very real growth story.
You mean Priceline?
No. Well.
Baidu.
I'm talking. Yeah, Baidu is just is a late stage base, but there's still a very real growth story going on there. I mean, growth prospects are still very, very bright. Priceline, I would not call a late stage base. You know, it came out of a big base. You can see on a weekly chart back in August of last year. And the correction was so steep it undercut the prior base. I'd call that a first stage breakout. So now you're talking, you know, maybe a second, third stage move here. So still early, I think.
So that's pretty cool that you can wait for a deep pullback and be all over it. Interesting.
Yeah.
Listen, folks, you stay right there. My man, Mr. Ken Shreve, and myself are going to be right back.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find find an invaluable tool to help me analyze the potential of the market each day. It gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. Welcome back, folks. And, folks, as you just heard, my new book is on sale at Amazon. What I'm also going to be doing, I'm going to be traveling across the country. I'm going to be doing a 2-hour workshop. The 2-hour workshop, the way it works, I'm going to be doing quality volume. I'm going to be doing the ABC structure, and I'm going to be doing the never-seen-before Tiger Gottlieb. The 2-hour workshop is $88, and that includes a rebate on the book. So if you buy the book at Amazon, we'll rebate it in cash or rebate it a double Tiger pass, which is cash at TFNN. If you'd like to go to one of those workshops, you can come to our website at TFNN. The first one's going to be in Tampa, Florida, April 27th, Orlando, April 28th, Boston, May 4th, Nashua, New Hampshire, May 5th, Denver, Colorado, May 17th, Boulder, May 18th, San Francisco, May 19th, and then there's going to be an online webinar on the 25th of May. We're talking with our man, Mr. Ken Shreve, and we're talking about the types of equities that he likes to go after, both fundamentally and technically. You know, Ken, when we go out, into the future, when we're looking, I guess I can understand, when we look at that China company, it is definitely a lot easier getting a company from 50 million to 500 million than from $1 billion to $5 billion, right? Whoop. I guess I lost him. Okay. I suspect that's why he likes to see accelerations like that in new companies. But
I can hear you. Can you hear me?
Yes, sir.
Okay, I'm here.
Oh, cool, man.
But no, I mean that's a good point. I mean, I will invest in large cap companies. I mean, Cognizant Technology Solutions, CTSH, has been a long time favorite of mine. This is an IT services provider. Again, another company that has been running higher for a while. But there are some good large cap growth stories out there. Oracle is another one. Another of my favorite large cap tech names. But by and large, the universe that I target are going to be these. 750 million, 1 billion, 2 billion, 3 billion market cap companies, because again, you can get these things in the early stages of their growth and watch their market caps, expand, from being a small cap company to a mid cap and ultimately a large cap.
Yeah, it is. You just brought up Oracle. It is amazing what Ellison done with Oracle, isn't it, man? Well,
there was a lot of pessimism when this company bought Sun Microsystems last year. There was just a lot of eyebrows raised, and here's a mega cap like Oracle with a market cap at the time of maybe $150 billion that's trying to transform itself from just a software company to a software and hardware company. But
yes.
This company is seeing the results big time already from Sun Micro's hardware business. You look at the year-over-year revenue growth in recent quarters. They did $8.7 billion in sales in their most recent quarter. That's 37% year-over-year growth. The quarter before that was 47%.
That's amazing
revenue growth. So but this is actually a chart. Another example of a stock that is very interesting to me right now. I think if the market finds its footing and eventually tries to break out, Oracle is a stock that has been behaving very well. It's sitting close to a high, showing good signs of institutional buying. Has a lot of qualities that I like to see. I'm trying to see if there's one weakness, and I'm not sure there is any. It's just a strong stock with a great management team. Yeah,
it's amazing. I was just looking at, if you're watching this on TV, folks, Ellison owns 1.1 billion shares, 21.83% of the company also still. That's pretty amazing, isn't it?
Pretty amazing.
Amazing.
Pretty amazing. But he's one of the best around. You know, Steve Jobs at Apple gets a lot of credit, but Larry Ellison is a heck of a CEO.
No doubt. Listen, folks, you stay right there. Our man, Mr. David White, for the next hour is going to have the president and CEO of Maxwell Technologies on, Mr. David Schramm. Ken, have a great week, safe week. Really appreciate it.
All right, have a great one, Tom.
We're going to be coming right back.